Let's talk about a prepayment penalty as it relates to a mortgage and in general, to some degree, how it relates to just banking and getting a loan in general. So, a prepayment penalty is what it sounds like. It's a penalty assessed for making a prepayment. So, what do you mean a prepayment? Prepayment meaning if you've paid off or even down the balance of the mortgage before a certain time period, you're prepaying it. And then the lender doesn't like that and they're going to assess a penalty. And you're like, holy smokes, it doesn't make sense. I'm paying you your money. You want your money, don't you? Why am I being assessed a penalty? So I'll answer that question here in a second. But the reality is that's what a prepayment penalty is. It's a fee that gets assessed to the person who got the loan. They have to pay money, additional monies to the lender because they paid it off early. So prepayment penalties, there's two different types or two different kinds. They call it a hard prepayment penalty and a soft prepayment penalty. And then there's also different, the amount of prepayments can vary. So some can say like, oh, you only get assessed a prepayment penalty if you pay the whole thing off, or you get assessed a penalty if you pay even like more than 5% off in a 12-month period or something like that. So they can kind of move around. So here's the good news. Most mortgages, the vast majority, don't have prepayment penalties. There are some that do. So let's talk about them real quick as far as which ones do and which ones don't. In today's world, and as it's been for a number of years, prepayment penalties are typically only assessed for investment type properties, meaning not on your homestead, not the home you live in. There could maybe in theory be some on some vacation homes because maybe they bought it as an investment, but they do use it as a lake house or something. But ultimately, it's not on your primary in most cases, right? I can't speak to every loan out there in the world, but generically speaking, they're for investors and investor loans. Well, why would somebody be assessed a penalty for paying something off early? Simple. Lenders need and want, they expect some type of return on their money. So if they're going to lend out 400 grand, they would like to see some percentage of return. So if somebody's going to pay that balance down aggressively or off completely, a lender might say, well, man, you owe me some money because I was expecting to make X. And by you paying me off 6 months later, I'm not going to make that money. So I just took all this money, this 400 grand, loaned it to you. I don't want it back in 6 months. I want it back in 3 years. I want to make my money back. So prepayment penalties exist to kind of protect lenders so that they can preserve their margins and their profits. Like those greedy lenders. And I agree with you. But the reality is that they do exist. The trade-off, if you don't want a prepayment penalty, then the trade-off is going to be you either pay more cost up front, more fees. You pay them because that's still part of their calculations for returns. So you might pay, whether it's 1 point or 2 point or something like that at closing, you might pay to buy out of that prepayment penalty, and or you might even pay a higher interest rate for not having a prepayment penalty. So in some way, they're getting their money. Whether you want a prepayment penalty that says, hey, I won't refinance or pay you off aggressively in the next 3 years, and they get their money slowly over time. Or if you say, I don't want a prepayment penalty, well, that's fine. They're going to increase the rate and or charge you more money at closing. So the reason why they charge them is to make sure they make their money. And now I mentioned earlier, there's two types of prepayment penalties, hard and soft. And so what that means is a hard prepayment penalty will say, man, you owe me this money. I don't care. You pay me off, you owe me money, right? If it's within this time period. And again, whether it's 1 year or 3 years or whatever that time period looks like, you owe me this money regardless. That's a hard prepayment. A soft prepayment penalty might be one of two things. It can be, hey, if you refinance with me again, like I'm doing your first mortgage, and if you come back and refinance with me again, then I'll waive the prepayment penalty because now they at least get to keep your loan and they make more money on doing the loan again. So that's a soft. Another soft would be, hey, if you paid off more than 5%, you owe me a penalty, but it's not as stiff, maybe as big of a penalty if it were a hard. So read the documents. I do have a personal story about that. I won't go into the details outside of just saying the document said at closing a hard prepayment. But they were like, don't worry about it. If you refinance with us, it's a soft. Man, that cost me a lot of money. I was young. I was early in my career, early in life. I believe what contract says, the contract does. So just keep that in mind, folks. But if you do have questions, call us. We will always make sure it's extremely obvious when working with the Mortgage Mark team. We will do our very best to make sure you know it's there. There's no question. We don't want somebody having a prepayment penalty when they don't know about it. So it's not a normal thing, but it can be, and it does exist in today's world. And if you have questions about a loan that's not with us, feel free to call us. We'll be happy to see if we can look over your paperwork, give you our best assessment of what you're looking at. But certainly just call the Mortgage Mark team. We're here to help answer all your questions. And as always, guys, when you think mortgage, think Mark.